The positive vibe for the hotel industry kept churning during the 6th annual Hotel Data Conference hosted by STR and Hotel News Now. At least that's how panelists felt during the general session titled, Are We There Yet?, when the U.S. hotel industry will hit its peak. Amanda Hite, president and CEO of STR, said supply growth is likely to be muted for a while, with supply growth up only 0.8% in the U.S. through June.
Our forecast for supply for this year is now 1% supply growth. And if you follow our forecast, a quarter ago we were at 1.2% forecast for supply growth. So we actually revised supply down. So rooms are opening slowly and we are not closing hotel rooms. Val mentioned yesterday, we have closed about 10,000 rooms this year. That's half of what we did in 2013. So we don't really see that closure rate picking up anymore in the last half of the year. So supply growth is very slowly creeping up, not an issue for us in 14 or 15. In 15, we expect it to be at 1.3%, still well below our long-term growth average of 1.7.
Robert Mandelbaum, Director of Research Information Services for PKF Hospitality Research, agreed supply wouldn't be an issue in the near term. PKF joined STR in predicting 1.3% supply growth in 2015. A lot of things that caused downturns in the past don't seem to be an issue right now, he said.
Oversupply, as we've talked about, not a near-term issue that we can see going on. Things that have caused downturns in the past. Oil prices, gasoline, doesn't seem to be an issue at this time. Asset price bubble bursts, housing prices, real estate prices, there still seems to be room to go up there. So a lot of the factors that have caused downturns and recessions in the past just simply don't seem to be in the cards for the next 2, 3, 4 years.
Dan Hansen, president and CEO of Summit Hotel Properties, isn't worried about the supply that is being added to the U.S. hotel pipeline.
The one thing that we look at really is where the supply is coming and what brands or what chain scale the supply is coming in. So we see an exceptionally large amount of supply coming in New York, which is kind of a unique market all on its own. We see New York being able to absorb that supply because of the dynamics of the New York City market. But if you look across the rest of the country, the supply coming in most of the markets is predominantly the premium select service. And if you think about why that's happening, you almost have to take a step back to how industry grew. It kind of grew from core urban cities to suburbs and to corporate office parks, and hotels by and large grew the opposite way. There were the big box full service downtown hotels, and then there was the interstate hotels.
STR's Hite said RevPAR has been positive during this cycle for the past 46 months. By comparison, the previous 2 cycles lasted for 112 months and 65 months respectively. The next 24 to 36 months should show strong growth.
RevPAR outperformance and RevPAR in general doesn't go up and down significantly. There's trends, and if RevPAR performance is outperforming by a certain number of basis points, that in our view should continue over a period of time. So outperformance, which you've seen in the space, for the first couple quarters of the year, is expected to continue, and so far through the month of August, top line numbers continue to show that outperformance to many of the forecasts. So we think there's definitely upside to the forecasts.
From Nashville, Tennessee, this is Alicia Hoisington for HNN.